You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
Oh, the technology. The ARK is sinking. Oh, the disaster. Oh, my goodness.
The humanity.
No, the technology.
The technology.
Don't you get it? It's the ARK Innovation ETF. Oh, the technology.
Yeah, and the technology, as you said, sinking beneath the waves.
Yeah, we're going to talk a little bit about hot stuff turning cold. Yeah. Not that we told you so, but we told you so. We did.
Only for the last 25 years.
Yeah.
That's it.
We've been telling you so all the time. Do you choose to listen? Not all of you. We know that for a fact, because you're always arguing with us. Hi, everyone. Welcome to Talking Real Money. The reality of money, the reality of managing money, the reality of investing, of spending and saving, protecting your hard-earned dough on this here radio show, soon to be a podcast on many of the finer podcast services around the world. I'm Don. Over there is Tom. Over there meaning 3,000 miles away, right there. I see him. It's just great. I can hang out with him and still be 3,000 miles away from him. So
think how happy if everyone else could say that.
We have a phone number. If you have a question, if you have a comment, if you have an idea, if you want to be saved from a financial disaster, give us a call at 855-935-TALK, 855-935-8255.
So what was all this ARK business? Would you build something over the weekend? Or?
No. This is that hot ETF. What's her name? What is she? Who's the name of the person who runs it? What's her name?
I've forgotten. I think the expression is flash in a pan.
Well, no, I mean, right now she's still pretty, her performance is impressive longer term.
Still sizzling?
But, here's the big but. You have to remember that her 45% annual 5-year return, 45, average annual return.
Okay, I'm here bowing down. I'm scraping soon.
Oh, what's her name again? I can't remember. Darn it. Oh, I can look it up over here. Hold on. ARK manager. I love the internet. I wish I had this. This
is an exchange-traded fund that has become extremely hot, and last year I think it made over 100% due to its...
Oh, it's Kathy Woods. Yes, Kathy Woods.
Kathy Woods. And I believe it made over 100% last year, due in large part to its...
over 100? Sure. Try 153%.
153 due to its extreme commitment to Tesla, which had a huge year last year.
Right.
Not to mention some other high flyers.
Yeah.
It invested in. But here's your, I get a sense we're about to hear the butt out of all this.
There's definitely a big honking butt. I like big butts. This is a big butt. What, did he fall down?
This is a family show. Please, come on.
It went up 153% in 2020, but...
Yeah? Oh, there's one T. Got it. Okay.
Yeah, I didn't say double T. Okay. But
yeah,
so far in 2021, well, it had a good January. It had a decent February.
Then
most of it.
Of March approached.
And then, well, late February, March, the last 30 days, not kind of ARK. Down almost 22% in 1 month.
The market giveth, the market taketh away. Or was it the strategy of Ms. Woods?
Well, the problem with her strategy is that it is very focused. And when you're right, you're really right, and when you're wrong, you're awful. Because the fund only has 52 stocks in it. 52.
And by the way, just for those of you joining us recently, we think you should own thousands
Yes,
of
we
stocks.
do.
Thousands of stocks. There was a piece last week in Bloomberg that said you only need to own 20 to 30 stocks. That's diversification. 20 to 30? Really?
That's one of the things that really bothers me about this business is that you've got so much noisy garbage out there. You've got people who are coming up with hot new funds and ways to invest, and
we'll get to one of those in a moment.
I mean,
Stand by for that.
You got people like Jim Cramer who claim to know which direction the market's going to go, when in fact his track record is pathetic. He never tells you how bad or good his track record is. He actually brags about his hedge fund track record way back when, but you know, you can't hang your hat on periods that could have just been attributable to luck.
I'm moving on from ARK right to Buzz. We'll talk about that in just a couple of moments here.
855-935-TALK is our number. The Buzz coming up, 855-935-8255.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Here's a behind-the-scenes talk radio secret. Most people call late, and then they get upset because we have to rush through the callers to get as many as we can in the final 15 minutes of the show. So the best time to call talk shows is early in the program if you have a question that is within the subject matter being discussed, and here that subject matter is your money. As the show is called Talking Real Money, 855-935-TALK is our phone number, 855-935-8255. Now, many on Wall Street are looking for the next mutual fund that will take you to infinity and beyond. What famous character?
Do you hear the buzz?
What famous character? Yeah, so Tom,
Buzz
what's the buzz?
Lightyear?
Tell
Buzz
us what's
Lightyear?
happening.
Well, you can see I didn't get a buzz cut, obviously.
Close enough.
No. All right. I didn't get buzzed because I'm doing the show.
Yeah.
So here we go. Yes, the newest thing you do not need to own.
What
Please
is it?
do not go buy this.
Yeah.
It's the
You. All right.
Van
Wait.
Eck
Hold on.
Vectors.
I got to stop you for a
Yes?
minute. Is this like telling a teenager not to go out drinking?
probably.
Okay.
So.
You know this
The
is
Van
this
Eck
could backfire on
Vectors.
you.
Oh, big time.
All right, go ahead.
Social sentiment. I love this. Social sentiment ETF, exchange traded fund, goes by the ticker of
What's
Buzz.
the buzz?
I thought that maybe they would be using for a coffee ETF or maybe a cannabis ETF or something like that, but apparently not. Buzz. And here's the thing. It invests your money in those companies that see $1 million in 3-month average daily trading volume. And here's the key part. Consistently talked about on social media over a longer period, but they will not give you, Don, the inside, the secret sauce of how they put all this together and manage the whopping, how much is it?
$1.6 million as of Friday.
It's only been around a couple of days.
Yeah.
By the way, these same geniuses had another idea back in 2016. At tops, they raised about $8 million and then they closed it down. So
I am actually looking at the fund's portfolio, and as you said, they just opened the fund
it's only been around a couple of days, I think.
I think March 3rd, relatively.
Wednesday,
sure.
Thursday, Friday. I'm right again.
Yeah.
Okay.
And as of March 4th, you bear in mind they didn't open the fund, so they didn't have any money to buy any stocks until the 3rd or the 4th.
Yeah.
Their number one holding is Ford Motor Company. Now, they bought it last week. Its 1-year return, this was before they bought it,
Yeah, right.
82%.
Wow.
So strikes me maybe buying high.
chasing returns?
I think maybe. Their third largest holding is Twitter.
Which, of course, is big in social media.
Right.
Because it is
social
media.
Yeah. Their 1 year return, again, prior to this fund buying it, was 91%.
So they bought things that have gone up almost 100% in the last year.
I'm going through the whole portfolio. Everything in it has already been way up, with the exception of DraftKings, which is their number 2 holding, but it hasn't been around long enough to have a track record. And it's DraftKings. It's a gambling company.
They're kindly enough include Boeing, which has not been one of the best performers in the last year.
Is Boeing in here? Oh, yeah, there's Boeing. There it is down below Pfizer. Pfizer's in there. Here's one I don't get, too. I'm going, number one.
Take a shot at it is what we say about Pfizer, but go ahead.
Ford, DraftKings, Twitter, Facebook, Amazon. Those are the top 5. Coming in
Does that sound like a technology
kind of
basket of securities?
What gets talked about on social media, except maybe like social media? A lot of those are social media. This one I don't get. Number 6. Now, I try to keep up with the buzz. I do. I pay attention. Don't you? I do.
I think you do better than I do.
I read 3 papers every day.
Mm-hmm. But that's not really the buzz.
I've heard no buzz, though, and I went looking, trying to find buzz about their number 6 holding with 3% of the portfolio right now, which is American Airlines.
I haven't heard much about American Airlines since Warren Buffett decided to blow out all the airlines a year ago.
I haven't heard anything positive, and I mean, maybe there's been negative news, but how could there be positive news? I just don't get funds like this. What people are trying to do on Wall Street is find a story, a hot story to tell you. And that's all this is. You need to just ignore. Again, this is a perfect example of the noise.
I love, by the way, I won't give his name because I don't like him, but somebody they hired to promote this exchange-traded fund said, Twitter, social media, all of it is dictating stock prices.
Yeah. No, it isn't. Oh, my gosh, I just went further down the portfolio. Oh, my gosh. Here's a company they bought on Wednesday or Thursday called Plug Power Incorporated. 2% of the portfolio. What has been its 1 year return?
Don't know the company.
I don't either. 766%.
Maybe they were selling electricity to people in Texas recently.
That's probably.
I don't know. That's bad, but true.
Yeah, that's funny. Hey, 855-935-TALK is our number. And Tim, you're up. Welcome to the show.
Save us, Tim.
Hey, thanks, guys. Just kind of listening. I'm kind of stuck on traffic here on I-5, and I'm listening to the show. I just got a question for people who are similarly situated like me, who really don't know a lot about the funds they're investing in, if at all. What is the minimum time a fund should be in existence before you even consider investing in it? And what is the minimum amount of capitalization the fund should have? Not like 1.5 million, several million, several hundred million. I'm just a general question for people like myself.
Those are great questions. Those are really good. Really good.
Radio.
Cool.
Yeah, drive safely.
Safe.
Those are really, really good questions, actually.
Mm-hmm.
I'm going to have my answer, and Don can have his answer.
I know what my answer is.
Well, first of all, we wouldn't invest in this for the aforementioned reasons. I'm going to say you got to be around 5 years before you even touch it.
I don't even need that. My answer is so easy, you're just not going to believe it. The market capital, or the total amount of money in the fund, who cares? Doesn't matter. The time it has been around, who cares? Doesn't matter. As long as it's an index product.
Or index-like.
As long as it is a passive product and just owns whatever universe of stocks you're looking to invest in, like small cap value. It could be a brand new small cap value fund if it's a small cap value index fund.
Which, we're using the Avantis exchange traded funds, which are available to all of you.
Very new.
And those are new, but but we know the philosophy behind them. They're not stock pickers. They're not pure indexes either, but they're not stock pickers.
But they're buying asset classes. They're buying small cap value, or they're buying emerging markets.
So what you're saying is it isn't length of time and it's not size, it's style.
It's style. It's the kind of thing they do. Actively managed funds I'd avoid completely no matter how old they are.
Tom and Don are talking real money.
Want a free copy of my book, Financial Physics? Well, go download it right now at vestory.com, vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Not since me dissing Dave Ramsey has any topic on the show gotten as much pushback as Tom's comments that trash is cash. No, cash is trash. They rhyme.
Well,
so
trash can be cash. You just got to find the right buyer.
For recycling. Yeah, that's what I meant. Thank you for clearing that up for me. Now, this listener sent this in saying comment only, no response needed. No, sorry. We are going to comment. We have to. We must. It's in our blood. It's in our DNA. And here's how it goes. Saying cash is trash to your audience is like saying to a kid, don't touch the stove because it's hot. They're going to keep an outsized amount of cash on hand now. Tom, really? They're going to do it just to spite you. Tom may have listed a nice bullet point opinion piece. This is all opinion pieces, folks. His thoughts, but after correction after correction, etc., economic downturns, the emotional factor plays a dominant role in what people are going to do with their money now. And there are a lot of people with a lot of money, even with inflation, eating it away, and they're happier with the vanishing dollar being sort of invisibly eaten away than watching it disappear on any given down day in the market. One's tolerance of downdrafts in the market gets less and less over time, regardless of the proof that it has good odds of returning more being invested. Don't discount the emotional factor. Neither logic nor proof will win. Of course, I'm not saying not to continue trying to persuade people to stay invested or eliminate some of their excess cash balances with investments. It's just that you all, as that's what y'all do. But as people have been burned once or 5 times, it gets easier not to worry about making so much money. Sometimes people just simply have enough and are not worried about making more. Mental health is as important as physical health for most people. I personally have way more cash than would be recommended, but it's what works for me.
By the way, if truly you cannot take market volatility, and markets are volatile, stock markets are volatile, even bond markets
are
go up and down. Yeah. Then, cash under your bed is fine, or in a bank or wherever it is, and you have enough and you don't want to deal with it. I don't try to turn Republicans into Democrats. I mean, that's how you feel. That's who you are. That's your makeup. That's fine.
Other Republicans are doing a fine job of that.
But the reality is,
it's a joke.
Most of us need to make something on our money to provide in retirement. Most of us, not if you've got whatever, and it can just sit there and it doesn't need to generate anything, then go on your way. But here's where I get into it a bit, because what he's telling us, it's David. Thank you, David, for writing. He says, do not discount the emotional factor. Well, we don't. We don't discount the emotional. I know how it's about a third of the work that we do for our clients is not just building the rails, but keeping you on them. Because we all get crazy about markets up or markets down, whatever it is. But when he says people have been burned once or 5 times, that's when I'm going to argue with you. Because how have you been burned?
Right. Let's say you put all your money in at the top in 2007, 2000.
Okay. Yeah, 2000, fall of 2007.
You've made money if you didn't get out.
And same thing last year in 2020, market went down 30% in 22 trading days or whatever it was. It came back. And you're right. Maybe in the future it won't come back. I don't know. But looking back, there has not been a period of time where the market has not returned your capital and made something on it. Not every day, not every week, but over time it has. So I struggle with people tell me they've been burned. Yeah, if you put all your money, you're in Washington Mutual, you got burned. Or if you put it in some limit, either individual stock or a limited sector or something like that, sure, you could put in something and never get your money back. But if you built a diversified portfolio, your money's always, the market has always returned over time. As bad as things have looked, you pointed this out, Don, whether it's the Great Depression, World War II, Korean War, assassination of a president, et cetera, oil embargoes, return to gold, all those things that come along, and they do. The market's always provided you a return for the risk you've taken. So I struggle a bit when people say, I've been burned. You've only been burned because the market went down and you took the money out and then the oven stayed hot, I guess.
You've been burned by your own bad behavior. That's the whole point of the show that people seem to be missing. This is not, you're not being burned because of outside forces, because of the market going down. You're being burned because of your emotional reaction to the market going down. And our goal is to try to slowly convince you to change that behavior. That's really our main goal here. 855-935-TALK. Give us a call. We'll talk about your life and your money.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
Reality radio for a really great future. We're talking real money.
Well, we're going to lose Tom soon. I'm so sorry. He's going to head out and start mashing the mosh again. Mashing the mosh.
Mashing the mosh.
Mashing the mosh.
Is that a new drink I'm going to have later? Mash?
It's a mishmash. Oh, I'm going to use that in my new commercial. Do you have a mishmash portfolio?
Ooh, I like that.
It's another good one. Anyway, see, Tom's upset. You're making Tom sad. You are.
That's sad.
I hate to make.
I'm feeling very optimistic these days.
You're weepy.
Oh, not right at this moment.
Because,
not right at this moment.
Because no one is calling except Tim at 855-935-TALK, 855-935-8255. And we know there are lots of you out there. We know you're there. You have no idea how powerful this technology is. We can literally see you. In your
You're going to scare people now.
We're looking right at you. Hey, eyes on the road. Eyes on the road.
If you don't call and ask questions, you know what we're going to do?
What?
We're going to play the Bee Gees over and over.
No. I'm going to just go record some lit readings.
Well, can you read this on my lips from that far away?
No, lit, my podcast of short story podcast.
Rosanna Dinah was wrong again. Okay,
exactly. You know, I'm thinking about, I'm actually working on turning lit reading into a public radio weekend program. I thought that'd be kind of cool.
People give you great accolades. I mean, and when you read Paul's book, people said it was different than reading it themselves. Because it
was me reading it.
No, that's what I'm saying. No, because it's different people you read something, you interpret it differently than just reading the words on a page. Because when I had a longer commute, I used to listen to books on tape. I loved it. And some of those books, they're just different to have someone read them to you. So
here, let me read you a little something. This is from CNN Business.
Yeah. Huh?
John David McAfee.
Oh, no.
The eccentric antivirus software.
Is that what we're calling? Oh, because
pioneer.
I see. So if he had no money, he'd be crazy. But the fact that he has money makes him eccentric.
Excuse me.
Great,
are you interrupting my dramatic reading of the news?
Please go. Yeah.
Has been indicted on fraud and money laundering charges by the Department of Justice. Yeah.
And what was the security at the middle of all this? What was the thing that he was defrauding people on?
I talked about it on, I think it was yesterday's podcast.
Well, no, yesterday was the scam.
Oh, well, one of them I talked about this on. The fact that cryptocurrencies are so easy to manipulate. And that's exactly what John David McAfee did. He and a bunch of people got together and they went out and bought some crypto cheap. Then they went on Twitter.
This was Alto Coins or what was it?
See, that's the, That's the other problem, is that
Anyway,
there's
go ahead.
so
Finish-
many of
finish
these
what he did.
stupid
Yeah.
cryptos.
Finish what he
Stupid.
did, yeah.
So anyway, he buys a bunch of cryptos. Altcoins. Yeah, it was altcoins.
Yeah.
He bought them really cheap, went on Twitter, he and his group, and they pumped him up, talking
Yep.
about how exciting this was and that it was a wonderful place to make millions of dollars, and you could protect yourself from the coming collapses and all the stuff. And then after he had pushed the price of his crypto way the heck up to like 13 million extra bucks, he sold it.
I thought he said he made $2 million in illicit profits.
Let's see. No, I'm reading this. He participated in a scheme that earned more than 13 million. This is from CNN.
How much is he worth?
Exactly.
McAfee virus protection software, isn't it on like every PC?
But he's not exactly one of the nicer people out there. And
he was involved in some other thing, right? Wasn't it a murder deal or something?
Yeah, and the thing is he's kind of been I think eccentric is a really nice word because he's not that rich anymore. He was worth more than $100 million several years ago.
So who cares about
Well,
10? All right, but here,
his net worth now is only $4 million.
Wow, okay, then he needs to do this kind of stuff. It makes sense. But here's the thing. What you said, I don't care about McAfee. I care that people are investing in Bitcoin and they could get ripped off by deals like this. Pay attention.
And this is, we'll talk more about this because it's an important topic.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
For your real life and real future, Tom and Don are talking real money.
Point the mic at your mouth. There we go. Like that. Actually, good mic technique. Put your mic slightly off to the side of your mouth so that you don't
across it.
Speak across your mic at a 45-degree angle so as to avoid plosives. Plosives.
And Don later today will give you a whole new look at how to be a better Zoom participant. That's coming up next.
Good mics
on most of these stations.
Now, Tom, on the other hand, I have to pop his plosives out all the time. You have a very powerful P.
Thank you.
You do.
Okay, we'll leave it at that.
I didn't even think of what I said. All right, I'm not going to go there. 855-935-TALK. That is where I'm going to go. 855-935-8255.
Bail us out.
Okay. Umberto, welcome to Talking Real Money.
How are you?
So I'm doing well. Appreciate your show. I won't waste your time with needless introductions. My question is this.
Yes.
I've got about $45,000 I would like to invest. And here to talk about the cryptocurrency, buying gold, investing in the stock market. I'm wondering if I were to take like 25 of that and invest it in possibly those three or other diversifications, what might be a good combo for this period in time?
How old are you, Umberto?
I'm 68, going on 200.
Okay, Umberto, I'm going to weep here in a minute because of this question.
Wait, did you say 58 or 68?
68.
58. 58.
Okay,
58.
so you're a young guy.
This
money
Only relative to us.
I know. Well, for me, that's a young guy.
All right.
Is this money?
He's 68. I'm sorry. We misunderstood.
Okay, you're
68.
still
So you're an old guy.
Young person.
Yeah, gosh.
No, we're not going to
I
say
barely
that.
want.
Yeah, see?
Okay, but is this money you're like going to invest for retirement? What's the purpose of the 45 or whatever portion thereof?
I've just taken out a reverse mortgage on a house valued at $630. I took out initial 50, still have like about 25 of that left. I'm looking to let some of my money work for me while not putting myself all in and all at risk.
Okay. I got it. Oh, Umberto, please. I need you to listen, please. Listen. What's the...
Lost.
This is not a good idea. This is really not a good idea. What I understand that you want your money to work for you, that you want it to grow. Everybody does. But why did you take out a reverse mortgage to begin with? What was the reason? Is that because you're going to need money to live on going forward?
Well, the deal was so I rented out some rooms along with my Social Security. That made me very comfortable. With the pandemic, as leases expired, people moved out. I wasn't free to rent to any other individuals because I would be taking on their loss if they'd lost their job or anything came up. Plus, at 68, I've got health concerns about bringing people I don't know into my living environment.
Please.
So last year,
so you needed the money. That's what we're trying to get to. You needed the money.
He needs the money.
Yeah.
He needs the money.
Okay,
Yeah,
all right.
I'm Robin
Then I
Van
wouldn't invest $1.
Okay.
We would not put, I would put
Nothing.
every bit
Zero.
of the $45,000 in something very safe that doesn't make money or much money. I mean, the riskiest thing I'd probably do would be a total bond index fund or something like that. The riskiest thing. I would not do stocks. I wouldn't touch Bitcoin with a 1,000-foot pole. Heck, 1,000-meter pole.
We wouldn't get into ARK. We wouldn't get into Buzz.
None
we
of this
be doing
stuff.
Any of those
no,
things.
sir. You have got to keep this safe. No one can predict what the future is going to do. And the one thing we do know for sure is that all of the things you're thinking about buying, at some point in the future, they will go down and they will scare the living daylights out of you. And they may go down just when you need that money to pay the bills.
And by the way, just to finish that thought, Don, because we did talk about ARK, we did talk about Buzz, but we didn't give the alternative. The alternative, frankly, is to own a total global index mutual fund with not for you,
not for Umberto, no.
But I'm saying for those of you saying, well, then what do you believe in? We do believe in globally investing at a very low cost and very wide diversification. Umberto, there is no way money that you took out of your home, basically, and paid a high price, by the way, for that. I always forget the cost of these things, but you paid a relatively high price for that. That should be set aside to pay the bills as they come in. Hopefully the economy reopens. You can get some borders back in there and pay some of those, but I would not invest that. Absolutely no way.
I mean, the good news is that because it's a reverse mortgage, he doesn't really ever have to worry about paying back the loan.
That's good.
But he also has basically no equity in his home either anymore. That's
no.
Some.
I mean, we don't know.
A little. He's not likely to have a lot because he borrowed against it, and so you've lost some of that. And and the fact of the matter is,
you don't take that money out of your home under any circumstance. By the way, because it's happened in the late 90s. People are saying, I'm going to take out a HELOC and invest it in 10 tech stocks. That is not a good idea to borrow money to invest.
Well, wait a minute, though.
Other people encourage you to do that. That's not. I don't think it's a good philosophy.
Wait a minute, though. But your argument is don't pay off your mortgage.
Yeah.
Well, isn't this the same thing? Taking out a reverse mortgage? You're just taking the money out of your house.
Okay, what is the cost of the money you're borrowing?
I don't know.
What's
You
the
never know on a reverse mortgage.
Yes.
You just don't. They don't quote an interest rate.
Clear as mud. Yeah. So, no, but in a general sense, borrowing money to invest, that's not a philosophy that I buy into. No.
All right. Thanks for the call, Umberto. We really appreciate it. 855-935-TALK is our number. 855-935-8255.
Are highly speculative.
Well, here's
ARK,
the other
highly
thing.
speculative. Buzz, highly speculative. Bitcoin, really speculative.
I don't think we can say this enough. I really think we need to just keep saying it over and over and over again. Most of you ask the wrong question. When you call us and say, I just received a windfall from an inheritance,
X.
Or I just got money out of my 401k, or I just had a reverse mortgage, or I just sold a piece of real estate and made some money. Whatever it is, the calls are legion. We get them all the time. I just came into blank. What should I do with it? That is not the right question.
The right question is, how does that money fit into a plan I already have? Or if you don't, you need to design one.
Yeah, the right question is, how do I plan to make the most of this money for X? And you fill in X. What is X? What is the purpose of the money? And how do I make the best of that money for that purpose within my personal parameters? We all have personal parameters.
Indeed we do.
We just do. And so there isn't one size fits all answer. There isn't a one size fits all answer. It's going to be different based on every single person is different. It requires a plan. And that's what makes it tough, because starting that is hard.
I know people call all the time and they want to get to how to invest first rather than all the information that I would need to try to give you that we can't. It's hard to do it in a 2-minute call too.
And I know you feel like that is the right question, because almost every stockbroker or insurance agent on the planet, when you ask them, they're not going to say, well, let's start a planning process. They're going to say, oh, right now it's this. 855-935-TALK.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And I guess it's this question that makes this particular thing that we do so valuable, because Tom and I many years ago started an investment advice firm. And we decided way back then to educate everybody. Even if you can't or don't want to become a client of ours, we will not sell you anything. We just want to help you.
And part of that is having a plan. Part of that is, yes, looking at your investments. Part of that is helping understand who you are so that you can invest properly for the future, because there isn't, as you just said, Don, one size fits all. We're happy to do that. We give you a free hour with any of our advisors. You can contact us by going to talkingrealmoney.com. It's
Actually,
free.
it's better. It's easier to go to Vestory.com, scroll right down to the bottom of the page, and you can set up an appointment right then. You pick the time. You say, I want it on this day at this time, and then Tom will get the whip and make them do it. Vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?